To begin, can you explain what triggers a tax audit in Canada?
The way you need to look at it is CRA is a giant computer. And so if your numbers don't add up, for example, your HST sale numbers and your income tax numbers aren't the same, the computer spits it out to a human to review. If you don't file for multiple years and then file all at once, again, it will get reviewed. Computer says this is not normal and sends it off to a human for review. And then finally, you file your taxes, but you don't remit the amounts owing. So for example, if you owe payroll and you file the payroll amounts but don't remit it, CRA has to come in and audit you to issue a reassessment so that the collection measures that they have can proceed.
When a business is notified of an audit, what are the best practices for communicating with the auditors?
Best practices would be through a tax lawyer. The questions being asked by the auditors are very specific questions, and they're asking them for a very specific reason that the average Canadian taxpayer would not know. And so you could be answering a question honestly and shooting yourself in the foot, and you could have answered it in a better way that protected you later on into the dispute.
What are the key financial records and documentation that businesses should have in order before an audit?
So what CRA is looking for when they begin an audit is the documents that were filed. So for example, let's take HST returns. They'd like to see the HST return with the numbers. And then what they want to see after, behind that, is, for example, your own accounting records from QuickBooks or whatever accounting software you have that lists all of the individual expenses and income that make up the numbers on the return. And then they want to see the supporting documents for the numbers that are found on the list.
And how far back should businesses be prepared to go in their record keeping?
I recommend at least 8 years. The law requires 7 years, but there are circumstances, for example, director's liability assessments, where a director of a corporation is being assessed with a corporation's debt from more than 10 years ago. And so it just protects you to have those documents available. So the longer the better, really.
If discrepancies or issues arise during the audit, how should businesses address them?
So one of the key problems that I see during audits is a misunderstanding or a miscommunication orally. Someone might be trying to explain something to the CRA auditor and they interpret it as something else. And CRA, the auditors and the officers will make notes of all the calls you have with them. And I've seen them on the back end from the CRA's perspective, and they're generally self-serving. So it's very, very important to advise them and provide your positions and your answers to the questions in writing.
What long-term preventative measures can businesses implement to minimize the likelihood of future audits?
One of the key points that I'll always tell my clients is get a good bookkeeper and have a reliable CPA, a chartered professional accountant. Over time, that will really help you. Once CRA has audited you and was required to make changes as a result of that audit, you essentially go on a list and they will continually review your next filings over and over and over again to make sure they're accurate. And so the best way to avoid being continually audited is to get the first audit right. And you do that by having the proper procedures and accounting procedures in your office.
Lastly, what are your top 3 recommendations for businesses to prepare for and navigate a tax audit successfully?
So always my primary advice is to have a good bookkeeper and accountant and have them available for the audit and have the documents requested in the CRA's audit letter available to them. And have it organized, really make it as easy as possible for the auditor. You're not trying to hide anything. If you don't make it easy for the auditor, they have to go looking for things. And that's generally when issues start to occur. Number 2 is avoid the triggers. Like avoid the audit happening in the first place. Make sure that your lifestyle is supported by the income that you disclose to CRA every year. Make sure you're filing on time. Make sure you're remitting those payments on time. You've got to look at CRA as a big computer. And as long as everything is done regularly and on time and there's nothing out of the ordinary, it's likely you could go through your whole life without a CRA officer giving you a call saying what's going on. And then thirdly, as soon as you get that audit letter, call a tax lawyer. And they'll be able to guide you through answering the questionnaire. They'll be able to explain why the certain questions are being asked and really just get into the nitty-gritty of what's going on in the circumstances to help you answer those questions in the most advantageous way. And then finally, on top of the tax lawyer, is sign up for our newsletter, where we'll provide you information on changes to tax law and the potential compliance changes to your business, and how to prepare for an audit and how to make sure your books and records are perfect for that CRA auditor.